Are you ready to dive deep into the world of investment choices? Welcome to Business Mind. In today's video, we're exploring the realm of index funds and mutual funds, uncovering the differences, advantages, and considerations for both. Before we start, if you're new to our channel, please don't forget to subscribe and hit the notification bell below to notify you on our next Business Mind updates. Index funds. Index funds are like a copycat in the stock world. They copy how a certain big group of companies, like the S&P 500 or NASDAQ, does. Imagine if you had a robot that copies all your moves in a game. That's what index funds do with stocks. They copy the big group's moves. They're cheaper because they don't need people making lots of decisions, so they don't cost as much for you to use. These funds just follow the big group and don't try to do anything fancy on their own, which keeps things simple and usually cheaper for folks who use them. Advantages. Index funds have some cool benefits that make them a great choice for many folks. First up, they spread out your money across lots of different companies, like how having a variety of snacks is better than just having one. This helps lower the chance of losing all your money if one company doesn't do well. Plus, they're cheaper because they don't need lots of people making tricky decisions. Instead, they just follow the big group's ups and downs. They're awesome if you're in it for the long run and want your money to grow steadily without too many surprises along the way. Disadvantages. But hey, there are a few things to think about before choosing index funds. They mostly do what the big group of companies does, so they might not do better than that big group. They don't have people making smart choices, just following along, so they could miss out on chances to find really good deals or new cool stuff happening in the market. Sometimes, they can hold on to companies that aren't doing so well just because those companies are in the big group they're copying. So, while they're good for playing it safe, they might not always give you the best of the best in the stock world. Mutual funds. Okay, let's talk about mutual funds. These funds have a different vibe. They're managed by pros who aren't just copying a big group. They're out there making decisions based on lots of research. They want to do better than the big group. It's like having a team of game strategists who try different moves to win the game. Unlike index funds, these managers can change things up, buying and selling different stuff and not just sticking to what the big group does. They have more freedom to pick and choose, kind of like having more options when deciding what game to play. Advantages. Alright, let's check out why some folks dig mutual funds. First off, these funds have the potential to do even better than the big group of companies. The managers are like expert players in the stock market game, trying their best to win by making smart choices. They aren't just following along, they have cool strategies up their sleeves. These strategies are like having special moves in a game that can help them reach certain goals or take advantage of opportunities in the stock world. Plus, some mutual funds even act like shields, protecting your money from when things get shaky in the market or when prices rise too fast. Disadvantages. But hold on, before you jump into mutual funds, there are a few things to think about. First off, they usually cost more because there are these extra fees for having smart people managing them. These managers play a big role in how well the fund does. Imagine your team in a game. If the coach isn't on point, the team might not win. Same with mutual funds. If the manager isn't good at making decisions or predicting the market, it might not do so well. Also, some of these funds don't perform steadily. Sometimes they do great. Other times, not so much, making it a bit unpredictable. Are you here for financial success? The path to it is full of challenges, but don't worry, Business Mind is here to help you dream big and achieve bigger. Check the links below and who knows, your success might just be one click away. Why index funds? Index funds are like a safe bet for folks who don't want too much risk in their investments. If you're the kind of person who likes steady and predictable gains, these are for you. They're perfect if you're not into complicated stuff and want to keep things simple. Plus, they won't cost you as much since they don't need a lot of fancy management. If you're planning to let your money grow over a long time without checking on it all the time, index funds are your pals. They're like planting a tree and letting it grow. without worrying too much. It's about being patient for the rewards. Why mutual funds? All right, let's talk about mutual funds. These are perfect if you're into trying to beat the regular stock market performance. If you want to aim for higher returns and don't mind paying a bit more in fees, these might be your thing. But remember, they're not for those who are too nervous about taking risks. You got to be cool with the ups and downs in the stock world. If you've got some specific goals in mind and want to be more hands-on with your investments, these funds could be a good fit. It's like having a plan and trying to reach certain goals rather than just going with the flow. Combination strategy. Now here's a smart move some investors make. They mix things up by using both index funds and some select mutual funds. It's like having a mix of your favorite snacks instead of just one. They go for stability with index funds, kind of like the base of a pyramid, steady and reliable. Then they add a sprinkle of select mutual funds to spice things up, hoping for a chance to do even better than the regular stock market. How much of each they use depends on how much risk they're okay with, what they want to achieve with their investments, and how involved they want to be in managing their money. It's like creating your perfect mix for success. The business mind verdict. When it comes down to making the final choice between index funds and mutual funds, here's the scoop. Think about what you want to achieve with your money in the long run, how much risk you're cool with taking, and how long you're planning to keep your investments. That stuff matters a lot. Your investment plan should match up with what you're aiming for in the future. Making sure your choices match up with your goals and how much risk you're comfortable with is super important. So, take your time and think about what suits you best, whether you prefer a chill ride or want to steer your own course in the investment world. It's about finding what works best for you. Now, are you ready to take charge of your investments? Join Business Mind, where big dreams become even bigger achievements. Don't forget to like, share, subscribe, and hit the notification bell below for more empowering content to elevate your business journey. Dream big, work hard, and see success beyond your expectations. Thank you for watching and see you next time. Business Mind signing off.